All right. Hello, folks. Tim Davis coming to you guys with my weekend market review. And as you guys saw, the selling pressure really took took on some strength on Friday. After, of course, what happened with Silicon Valley Bank. Could that be the start of something very detrimental to our markets? That is very, very possible. All the market need is catalyst to continue to fuel this bear market. We started off a little earlier in the week with Fed Chair Jerome Powell's testimony, and to make matters worse, we got the issue with the Silicon Valley Bank started to spark fears within the market, and the bears continued to put the pedal to the metal and press on the gas, as well as the jobs data that came out on Friday, it was Friday or Thursday, which seemed to be still pretty good. So gives the Fed no reason to let their foot off the gas. So with all that said, we're still in the bear market, and anytime you have a bear market rally within the market, all it needs is a catalyst to start the reversal back to the downside. I think we got plenty of that on this week. So I'm going to start off by taking a look at the SPXA 200R, which is the tool that tracks the S&P 500 companies trading above their 200-day moving average, as I explained in detail in the video that I did recently. I'm going to start off with this tool, looking at the monthly chart, because I want to point out something here. Some levels that I've been watching, and I think I shared this in a recent video. I said pay close attention to these levels in this tool, and certain setups to watch for if we fail to break above certain levels. And we did fail to break above certain levels of resistance with this tool. And like I said before, when the momentum starts to shift from a strong move to the upside to a strong move to the downside, this tool will show you what the overall sentiment of the market is. And right now, the overall sentiment of the market, by looking at this monthly chart, is that the bears are definitely in full control. So overall sentiment of the market is very negative at this point. So I told you guys on the last week that this area here was an area of resistance, and if for some reason we could not break above this key level of resistance within this tool, we're going to start to see a downshift, which is what we are experiencing now. So we are in the month of March. February was a down month. Now March right now, as it stands, is setting up the same way. Very negative. And if we look at the full stochastics, we are just on this monthly chart, we are just starting to get the green line crossing below the red line, which is a bearish signal, and most folks would use it as a sell signal. Now, when this normally happens on this strong monthly chart, monthly charts, folks, pay close attention to them because they supersede the noise that we hear in the short-term charts, such as the daily, hourly, 4-hour. Monthly chart will supersede those, so that you know that the overall sentiment for this month and probably months to come is going to be negative. So any bullish reversals to the upside could possibly be sold off and sold off quickly. Now, last time when we had this crossover, this is what we saw back in the mid to towards the end of 2021, and we saw that sell-off. We had a crossover here in 2020, and it's full stochastics now. Oscillators, when we got that bullish to bearish reversal, we sold off there. And every time we get this strong crossover on a monthly chart, with the full stochastics within the monthly chart of this particular tool, we see sharp sell-offs. All right. So that's what we look like as far as the bigger picture is concerned. So right now, again, this is the market sentiment gauge. The market sentiment is strongly bearish right now. Look at the CCI. It has yet to follow the full stochastics, meaning we could see a lot more pressure on this market over the next several months. Now, let's back out and look at some near-term action. Take a look at a weekly chart. So weekly chart, again, we broke a key level of support. Told you guys that if this tool stays above the 50% level, that is a good sign for the bulls. If we break below that 50% level in a meaningful way, that's a good sign for the bears. And we broke below that level in a meaningful way. Now the percentage is sitting at 41%, folks. So 41% of the S&P 100 companies are now trading above their 200-day moving average, just 40%. So we reached right around 40, 42%. With that said, it's gonna be more pressure on it. It's gonna be more pressure on it to the downside on this market until the overall sentiment changes. And right now, there's too much data that's coming forth and events that are happening, such as Silicon Valley thing, that is putting more and more pressure on this market. So the bears are starting to take the driver's seat again. And the bulls had their run from October all the way up till the I guess the middle part of February, or should I say the end of January. Now the bears are starting to take their turn. And I think the bears run is going to be it's possibly it could be more fierce than this bull market rally. This bull rally within the bear market. This bear run could be much more fierce. As we see, we got a strong candle already forming that already formed for this past week. What will next week hold? Now, if I was to show you guys some near-term action, I wouldn't be so dire about next week, because with this big sell-off we had this week, we could see a bit of a little bounce for next week. But again, like I said before, because the bears are pretty much taking the driver's seat, any bounce we see is probably going to be short-lived and be met with some fierce selling on the other side. So keep that in mind as we continue to go through the trading week next week and the rest of this month. So again, we broke that 50% level. Where to now? Here is my next level of support with this tool, which is right around 0.3, somewhere around there, 0.3 or 0.2. So we got to be keeping that in mind. Again, this is the weekly chart. Now, take a look at a daily chart real quick. One thing I'll point out on a daily chart is that even though we broke that level of support, we're now hitting some levels in the oversold territory, which will lead me to believe that we could see some sort of a bounce eventually sometime next week. And then we have to pay attention to where that goes. Again, now, since this level of support was broken, former support will become resistant. So if we do get a slight tick down and a reversal back to the upside, they will be muted right at that 50% level. So we might run into that 50% level again, because that 50% level is representing a strong level of resistance now. Form of resistance becomes support. So with a lot of trading action around that level, if we do sort of kind of find some way to bounce on next week, I think it's going to be short-lived, and we'll be heading right back down. So that's something we got to pay close attention to. Now, let's look at the major indices. go straight to the S&P. So again, this is a daily chart. Again, we had the sharp sell-off on this past week. Now, we are in oversold territory right now, but it does not mean that we can't go lower to start the week. That is a possibility. We're in deep oversold territory. Look at all the indicators. But again, any rally could be short-lived, such as we saw here. Look at that. After we hit oversold territory here, we got a quick bounce. Where to almost back up to a level of resistance and right back down. I think we could see the same thing. Now we're in oversold territory. So eventually we could see a little pop like so, and right back down. We can start to see this action quite a bit now that the bears are taking the front driver's seat in this particular market. That's what our daily chart looks like on the S&P. Again, I like to pay when I see such strong moves to the downside. I definitely like to pay attention to the weekly charts to get more clarification as to what the overall direction and sentiment is and how long that could last. And look at the weekly chart, folks. This is a strong downturn to the downside. So we could see some big selling pressure every time we hit probably an oversold level. We may get a short bounce and then right back down. I mean, like real quick. So don't fall in love with any rallies right now, because I think some of these levels of support about to be broken and possibly in a major way. So over the next couple of weeks, as we see the weekly chart is still showing a strong move to the downside, and we haven't even reached a level of support here. And if you look at the oscillators within the full stochastics and wins percentage and the CCI, they're all still pointing down and have not really reached severe oversold levels on the weekly chart yet. TTM squeeze still showing dark blue bars on the upper side, on the above the zero side of the TTM squeeze. I'm looking for, more than likely, as price continue to fall, for this TTM squeeze to start to show a lot of bearishness by showing the red bars below the zero line. So what we can see over the coming weeks or so, we could see a challenge. You could see price action challenge the October lows. That is a huge possibility. If we do not hold this level of support right around here on S&P, which is around 3,800, which I told you guys to pay close attention to that 3,800 level. If we cannot hold support right around the 3,800 level, we're possibly going to see continued selling pressure over the coming weeks, with a possible move back to test the October lows. Folks, just want to fair warn you, if for some reason we get to those October, if we do breach 3,800 over the coming weeks, and we don't hold those October lows, we may get, bounce around there a little bit, because that's going to be a strong area of support. But if we don't hold those October lows, folks, look at this monthly chart. It's looking more and more bearish than ever. Show you guys something. This is on a monthly chart on the S&P. Look at what's starting to happen. Look at these oscillators. Look at this sell signal in the full stochastics on the monthly charts on the S&P. We're starting to get the green, red crossing above the green. Look at the oscillators in the wins percentage. They were heading up in October. They're starting to turn lower. Look at the CCI starting to get very, very close to a bullish to bearish crossover. And look where we're getting close to. This right here is the beginning of the sell-off in 2020. Here is the October lows. Here where we are at now, with all of these oscillators starting to point downward. This is where we are now. So we could hit these October lows, folks, and just plunge right below them. That is a huge possibility. And then look where we will be in this area where the sell-off started in 2020. We're getting very close to that level, folks. And if we break these October lows and start to head down, the 2020 lows will be in play, folks. Not one to bring fear, but we're still in the bear market. And with so much stuff happening on this week, it could have been a catalyst of the continuation to the downside and a possible tip over below the October lows and start to head towards the 2020 lows. So that's something to pay close attention to over the coming months. These next several months could be very, very detrimental to our market. So if you saw some posts that I posted on Discord, for those of you who follow me on our Discord, you're seeing some posts that I put, and I was serious about that. Don't get caught holding the bag. Trying to continue to ride a bull rally within a bear market. This is one of the reasons why, is because there were signals that were pointing to a pop in the VIX, and we got that on this past week. So kudos to those who paid attention to that video that I posted and said, beware. I was hitting big time flashing warning signals this past week because I saw the setup in the VIX. And it looks like it was gearing up for a major move to the upside, and it did just that. So I'll get to the VIX in a second, but I just like to point out things as they start to formulate and appear right before our eyes within the technical tools that we use. All right. Let's switch back to a weekly chart. And let's take a look at the Dow Jones. Dow Jones, just like everything else, starting to break major levels of support. Again, Dow Jones, just like S&P. Told you guys we've been hovering around these levels of support, of resistance for quite a bit. And just could not, the bulls just could not pull it off. They could not break this level of resistance. So what happens? The bears say, okay, we'll take over. It's starting to break support. Here are the October lows. Here's where we stand now. And here's what our monthly chart looks like. It looks very, very detrimental for the bulls. So looking at this monthly chart on the Dow Jones, here's where we stand now, starting to creep below support. Here is the October lows. Here is the highs of 2020 and the low of 2020. And here is a look at the full stochastics indicators. The oscillators starting to turn negative. Wins percentage pointing downwards, turning negative, and CCI is just about to turn negative. So right now, folks, nothing's looking good for the bulls. So right now, because we could see some drastic moves to the downside on the daily and 4-hour charts, you're going to see some quickly oversold conditions and then bounces, probably like some big bounces, and then quick reversals. I think that's what we're probably going to be in store for over the coming weeks and months. Some oversold conditions and then some bounces and then right back to oversold. That's what the Dow Jones looks like. Let's take a look at the NASDAQ. Silicon Valley Bank, folks. I think it's one of those banks that holds a lot of funds for a lot of companies within Silicon Valley. So with that said, just imagine some of these tech stocks is probably going to really start to suffer in the near future. All right. Okay, here's our NASDAQ. It's just getting beat up, folks. The NASDAQ has really been struggling since this bear market has begun, and it really hasn't paid any huge strides, folks. This is a monthly chart. We've been in oversold conditions in a monthly chart at the Nasdaq for quite a bit, and it's probably gonna stay oversold, folks. And the Nasdaq is just the worst of the bunch because it hasn't really participated big time in these in the bounce from October. A little small bounce, but it's just been stuck in this range, and it looks like we're about to go even lower. So Nasdaq, just be very, very careful trying to trade those bounces. They'll probably be reversed real quick. Here is the highs of 2020. Here's the lows of 2020. Nasdaq is very, very close to all of that. So with the oscillators and the wins percentage starting to turn back down already, CCI starting to turn back down. Bulls and just haven't really got clearly out of oversold territory in the monthly chart. And it's like it want to turn back, it want to stay there. That's what our Nasdaq looks like on the monthly. Weekly chart of Nasdaq looks extremely, and I do mean extremely bearish, with a just starting to get this bearish signal crossover on a weekly chart. And the full stochastics, wins percentage, CCI just starting to turn negative. TTM squeeze starting to turn negative. The momentum starting to lose its flavor, and support is about to be broken. I think this support is going to be broken too eventually, probably real quick. So let's see how this plays out on this coming week. But needless to say, look at a daily chart. Again, we are in oversold conditions. So could we see some more movement to the downside? That is possible. You know, I tell people, technicals, are good gauges, to give us some possible insight of what we can expect. But does not mean that we can't see more pressure to the downside, even with technicals in oversold territory. So keep that in mind. You go even much lower than what we see now before we see a bounce. And any bounce, again, I believe, folks, are going to run into some resistance. We're going to run right up into some areas of resistance. So keep that in mind. Russell 2000, same scenario. And it's probably the worst of the bunch. And it's definitely in some deep oversold territory. And it could go even further. Again, this is a daily chart, so we could see some type of bounce as we start next week. So we have to see how that pans out. Here's a weekly chart of the Russell. It looks very, very dire. Breaking some key levels of support. Here's a level of support, which is we hit around December 2022, around this Christmas week. Right after Christmas, we got around 1734 on the Russell. I think that's going to be broken in a big way here in the near future. And look at the monthly chart of the Russell. Sharp reversal to the downside. Looking at the wins percentage. Reversal setting up on the CCI. Reversal setting up on the full stochastics and price action as well. Starting to head lower. And look at this, folks. Here's the 2020 high. The 2020 high of the Russell. And look how close we are to that. The October low, if we break the October lows, we're going to be in this area here. We're going to be starting to dig into the area where we fell from in 2020. And once we break below these October lows, the 2020 lows are going to be in sight for the Russell. And that'll probably get there first. So we see the Russell break below the October lows. Folks, we know that the route is on. So pay close attention to that. Now we're going to take a look at the VIX, and I'm going to throw some moving averages on here because I want to show a couple things. Looking at the moving averages now. Here's the VIX. VIX monthly chart. Look at what's starting to happen in the VIX monthly chart. I told you guys that we've been hovering around this level of support of the VIX for quite a bit. We've been hovering around the mountain, and we come. It's been hovering around the mountain when she comes. Here is our level of support. So right between that 18 to 20 level, we've been hovering around this level. And look what's starting to happen. We are starting to get a turn up. Look, and this is a monthly chart. Look at what most folks consider a bearish to bullish reversal or a buy signal, whatever you want to call it, in the full stochastics. They're starting to get the green crossing above the red as a strong bullish narrative for the VIX. Look at the wins percentage. Strong bullish narrative for the VIX. And look at the CCI. We're just starting to cross. Folks, these next couple months, we could see a strong movement to the upside with the VIX. With so much data starting to come out. You got CPI data next week. We have the Fed speak probably about a week or so after that. So one thing after the next. By midsummer, we could see, by midsummer, or even before that, we could see the VIX break out above this diagonal level, diagonal levels of resistance. We could break out above that, and we could see a 40 handle on the VIX, folks, by summertime. Just fathom that. We could see a 40 handle on the VIX, possibly by summertime or before. And who knows, how deep this sell-off could be. It's anybody's guess at this point. But if I was a betting man, I would say that this high in the VIX could be threatened sometime this year. That's my guess. All right. Let's look at some current action on the VIX. And I am going to switch over to another chart here. I want to point something out. Okay. So here's the daily chart of the VIX. As you can see, told you guys, if the VIX find a way to pop above that 200-day moving average on the daily, it's going to be probably detrimental for our overall market. And the VIX finally got that. But look, this long wick. So the VIX really rallied like crazy on Friday, and it pulled right back. So in the near term, this is going to be our ultimate, well, not ultimate, but it's going to be a near-term high for the VIX, which right now is sitting around 29. So we're seeing a VIX very, very close to 29. So that's probably going to act as a level of resistance for right now. We could see the VIX continue to pull back just slightly, maybe right back around here, very close to it, before we start to see it move up. What I expect to see is that as the VIX pulls back, I expect to see this 50-day moving average start to curl upward. So that will act as a level of support. And so we're probably going to see some action like this. And eventually, I think we could definitely take out this particular high, this near-term high that we put in around 29. But I can see the VIX rising over the next several months or so. But nothing goes up in a straight line, so keep that in mind. Every time you get a VIX pop, eventually you're going to get a VIX crush, vol crush back down. But I don't think we're going to be revisiting these lows anytime soon. So I think we're above 20. I think we're going to stay above 20 for quite some time. I think we're going to continue to creep higher. So that's what the near term looks like. Again, we could see, some near term pullback in the VIX since we got such a big spike on this past week. But don't expect us to drop back down here to these below 20 levels. I don't think that's going to happen anytime soon. So we'll see how that pans out. I could be wrong. All right. Something happened. Okay. All right. And looking at our weekly chart, look at that strong weekly candle for the VIX. Very, very strong. With a strong pop up to around 20 and a sharp pullback. So again, we can see continued pullback in the VIX sometime next week. And then by the end of next week, we can see the VIX pop right back up and continue its move to the upside. Again, we are well above the 200-day moving average on the weekly, and we are above the 50-day moving average on the weekly as well. Here's the monthly chart of the VIX. We're starting to now to creep right back above its 200-day and this 50-day moving average on the monthly chart as well. And if you look at the again, indicate the oscillators in the full stochastic swing percentage, NCCF, and RSI. This is RSI right under the bottom, all starting to point up. So again, folks, any pullback in the VIX now, I think it's going to be short-lived. So every time we get a VIX rally, big rally, probably going to be met with some near-term pullback and then right back up again, as we did here. Big rally in the VIX over the past couple of days, sharp pullback in the VIX throughout the day. On Friday, could pull back a little bit more, and then what I think we're going to see is, it's going to definitely hold above 20, so somewhere between 21, 22, which is where we could probably see the VIX find some support and then right back up. So, folks, these markets are definitely in favor of the bears right now. Here's a daily chart of the S&P with my 50-day and 200-day moving average lines there. As you can see, we dropped below the 200-day moving average on the daily. So, and we are in oversold territory. Look at RSI. RSI is below. It's in the oversold territory. Wins full stochastic says as well, and wins percentage. So in the near term, we definitely could see a little bounce. But again, that 200-day moving average, now that we have fell below it, it's going to act as a strong, and I do mean strong, level of resistance. So we do see a rally, and if we don't make it up that far, you'll see price actually turn right back down. So what I do expect to see as we navigate through this market is eventually start to see the 200-day moving average, 50-day moving average started to curl back downward and cross back below this 200-day, and they will both start to act as a level of resistance. So as we go down, we'll probably start to see that. I don't think we're going to break back above these major moving averages in a big way in the near future. Look at the strong pullback on the weekly chart. Price action dropping below its 50-day moving average and starting to race towards its 200-day moving average on the weekly. Another different look at the Dow Jones with my moving averages. As you can see, Dow Jones creeping below 50-day moving average there on a weekly chart. Look at the daily chart. Dow Jones finally fell below its 200-day moving average, which is this red line. And look what happened when we hit that drop below it, tried to rally back up above it, and then bears push price action down. So right here, the tip of that wick is going to be a strong level of resistance. So oversold territory now. Again, we could see a little bounce, run into resistance, and probably head right back down. We'll start to see the 50-period moving average start to curl downward and possibly eventually cross over this 200-day moving average. So until price action finds a way to break back above these moving averages in a big way, the bears are going to remain in control. Take a look at the NASDAQ real quick. Again, just looking at different different angles of this market, folks, with different indicators on the chart, so you guys can get a just a general picture of what these markets are showing us. Now, here on the NASDAQ, we saw where this blue line, which is my 50-day, was rising and attempting to cross back over this 200-day, but I think it's going to fail. We got to stop right here, right? Price action stop right below this 200-day after we try to push price action back up. We're starting to pull back in oversold territory, so I do we could see a little rally, and then I think any rally from this point, and I don't mean like full time, but rally like we see in October, it could be very short lived, up and right back down. That's what I expect to start to see here in the near future. Some quick fades with these rallies now. Here's our Russell and Depot sold territory, well below its 200-day moving average. So again, we could see a move back up towards the 200-day and then a fail. So that's what I expect to see. You know, any rallies to be quickly sold off until the bulls start to take full control of this market. But right now, the bears are in control. The bears in the driver's seat, and they're going to stay in the driver's seat. Looks like probably for quite a bit. This is a monthly chart, as you can see, barely, broke these levels of resistance here and just started, just come right back down in a big way. That's on the Russell. Now, hopefully, it's something that'll help you guys with your trading strategies moving forward. Be nimble, be quick. If you are bull in this bear market, don't stay too long because you'll get a hole in the bag. We're still in the bear market, and that bear market does not look like it's ready to relinquish its power to the bulls right now. Like it's ready to dig its teeth in and get a little bit more fierce. This bear is really, really ready to ramp up, it seems like. For those who followed some of the trades that I posted last week, told you guys specifically, I'm gonna start letting you guys know some of the trades that I were in. One that really, I think when I closed this trade out, I was in a BITO put, BITO, which is tracks the Bitcoin ETF. It's sorry, it is Bitcoin ETF, which tracks Bitcoin. I took on some put options with this, and I actually closed it out on Friday, I believe, for well over a 400% return. So I'm gonna start sharing some of that stuff with you guys, especially for you guys who follow us in the Discord. When I take on these positions. So yeah, BITO hit the 200-day moving average, and I was like, uh-oh, it's great reverse. Jumped in with some put options, and man, did it really, really reverse in a big way. So, and when we put options, I had on those, close out for about probably over 400% gain. Longer term position that I am in, which I saw some unusual option activity. This one not too long ago. The KKR is starting to reverse as I expected eventually. Here's what monthly chart looks like. Looks like we got it's turning down just like the regular markets too. Like we're gonna possibly break back below this 50-day moving average in a bigger way. So I have a longer term spread on Southern Spot to June, expecting price action to fall below this 50%. I'm sorry, below this 50-day moving average before June, and possibly below $40. And it allowed me to take advantage of maximum profit. It's a $10 spread that I ended up purchasing probably about a week or so ago. And to learn more about that, you just have to follow us on Discord. All right. What else? Let me see if there's something else that I think I probably recently picked up. Bear with me 1 second here, folks. Oh, yeah, this is one I saw on, I want to say I saw this past week. Probably on Friday. I think I saw this on Friday. There was a lot of put option activity popping up in this charge point stock. And I just happened to follow what I saw because of the market starting to reverse. It's in oversold territory now, but I think it could definitely go lower. Already profitable. I mean, probably about 50-60% already. But it was a lot, and I do mean I saw a lot of bearish activity that was popping up in this particular stock. So, and it was right around the 9-strike puts, 10-strike puts. Like it was a lot of activity that was happening on this past week, Thursday and Friday. So I happened to pop in there and decided to pick up some 9-strike puts and some 9.5-strike puts that expire Friday, March the 17th. Up in a big way right now, so we'll see how that pans out. Also, I jumped in with some put spreads on the Russell, on the IWM. Did that probably about a week or so ago, and that has turned out very nicely. As you can see, the big reversal to the downside. And one more, BBWI. Another one I picked up probably about a week or two ago. That one also is doing quite nicely. And if you look at a monthly chart on BBWI, it's like, even though the daily chart shows some oversold conditions, like we have more room to the downside. And this one position that I picked up was a spread and doesn't expire until May. So just wanted to show you guys what the market is showing us, folks. Be very careful if you are a bull in this bearish market, because I think the bears are really going to start to ramp up here in the near future. All right, folks, all I have for you guys right now. Until the next time, I will catch you guys sometime midweek next week. Enjoy the rest of your weekend.